October has been a busy month for Venezuela. Not only did Nicolás Maduro's government and the opposition agree to an electoral roadmap, but opposition leader María Corina Machado won a primary with over 92% of the vote. On top of that, Washington announced it would ease sanctions on Caracas' oil and gas sector for 6 months. What does all this mean for Venezuela? I'm Karin Zissis of ASCOA Online, and we're going to find out in this episode.
You're listening to Latin America in Focus.
Latinoamérica en Foco.
América Latina em Foco.
A podcast by America Society, Council of the Americas on politics, economics, and culture in the region.
So, we now have a plan for sanction relief and the elections. After a decade of Maduro running the show, could things actually change in Venezuela? Well, there's an elephant in the room, and that's that the Venezuelan government has banned María Corina Machado from running for president. And how the Maduro regime handles her candidacy could affect the outlook for sanctions and the energy sector.
That might mean that, for example, companies that might be considering investing or not in Venezuela, are also have a massive uncertainty.
Our guest this episode is Francisco Monaldi, a fellow and the director of the Latin American Energy Program at the Baker Institute of Rice University. He spoke with my colleague Guillermo Zubillaga, head of ASCOA's Venezuela Working Group, about investment, the impact of easing sanctions, how it all could affect the U.S. elections in 2024, as well as whether the country will actually see real change.
I am delighted to be here with my friend Francisco Monaldi, who, for anyone who has been following Venezuela, knows that he is the most sought-after oil expert there is. So I am very grateful to have this time with you. Thank you, Francisco, for being here today.
Thank you, Guillermo. Thank you for inviting me.
All right, so we're recording this podcast the day after the opposition managed its own primaries that took place inside the country and outside of the country with a lot of logisticals, obstacles. A lot of people were skeptical about the primaries even happening. However, the results seemed that a lot of people participated, and María Corina seems to have obtained in most of the preliminary results almost 90% of the vote.
Este no es el final, pero este sí es el principio del final.
So, Francisco, I wanted to start by getting your impression as a Venezuelan, someone who has followed Venezuela closely, a professor, academic. What's your reaction to what happened yesterday inside and outside the country?
Yes, I think it was very impressive, given the fact, as you pointed out, that there were so many obstacles, lack of funding, the government not allowing to use, the spaces that usually are done for elections, harassment of all kinds. It might be that because of the deal with the U.S., the government didn't go full frontally against the primaries as they might have done otherwise. But it was a very tough environment to do this, and it was very impressive to get a participation that seems to be above 2 million people, and this is in a country in which already 7 million people, of course, left. The other amazing, of course, element is the massive, I don't recall a result of, more than 90% for one candidate. It's clearly, a mandate that María Corina Machado now has in her hands, that she is clearly, represents a massive wave of political discontent and wanting to change the political situation in the country that she seems to have become the symbol of. And so I think this is a new political reality that we are facing, and of course with a lot of challenges because she's banned from being a presidential candidate.
Right. And I want to go back to, you mentioned the deal in Barbados, which basically, for those that do not know, but I'm sure you do if you're listening to this podcast, the unitary platform and the Venezuelan government reached a deal that in many ways outlines a lot of paths that they need to follow electorally to have a free and fair election in the second semester of 2024. However, one of the big questions or absence in that deal is that María Corina Machado, who seems to have won the primary by a lot, it's not part of that deal, and she's banned from running for office. So I want you to explain what the deal involves in terms of what the I guess the Maduro government got. The opposition, of course, got, as you said, the opportunity to be able to do these primaries without any interference from the government, either legal or on the street. And then the U.S. lifted some of the sanctions that were in place from the Trump administration. But before we understand what it was lifted, I want you to tell our audience what was there before and what is there now.
Sure. So we had, in terms of the economic side, two sort of sets of big sanctions to Venezuela. One were originally financial sanctions in 2017, and the most important ones from the perspective of what happened last week are the oil sanctions that were instituted in 2019, and it coincided with the recognition of Juan Guaido as interim president. So that had not only the effects of sanctions, but on top of that, the Venezuelan opposition sort of taking over some of the assets, for example, like Citgo. But going specifically to the sanctions, Venezuela was exporting a little bit north of 500,000 barrels per day to the US, and starting that date, they couldn't export. They could also not import about 100,000 barrels of products and diluents for the extra heavy oil that they were importing from the US. Right. But on top of that, in 2020, the Trump administration, under the maximum pressure policy, instituted sort of what we call sort of the secondary sanctions, or the threat of secondary sanctions. And so, for example, Rosneft, the Russian national oil company that was marketing about half of Venezuelan oil after the sanctions to PDVSA, was also sanctioned. The trading arm that was doing that, not the whole company. And so that basically meant that India and China, who were buying the oil that Venezuela used to send to the US, decided not to buy it anymore, at least in the open market. And that meant that Venezuela had to search for the black market. And the black market basically is in China, but it requires very heavy discounts that the PDVSA has to give all these traders to make all these difficult transactions in terms of ghost ship, transshipment at sea, et cetera, et cetera. So that's basically what changed now, because now, at least for 6 months, not only PDVSA and any of the joint ventures in Venezuela can sell oil in the US and import oil from the US, but they can sell anywhere, basically. And from now on, at least for 6 months, there is no need to use the black market for Venezuela. And that's a very big deal, because the heavy discounts that Venezuela had to give are not going to be present now.
So is Venezuela in a position right now, after years of those tough sanctions, as you mentioned, to immediately switch and be able to say, hey, the oil companies or trading companies, come to our ports, take the oil and go sell it? Can you walk us a little bit about how that transition works and where the country stands to be able to do that or not be able to do that?
Yeah, I mean, it's unclear to me, how the sort of over-compliance or concerns about some of buying oil from Venezuela might play. But think about this. Already, with a license to Chevron, that started at the beginning of this year, or sort of what's approved late last year, Venezuela is exporting through Chevron 150,000 barrels of oil to the US. These, I think, might mean that to that we will add, to round up the number, in between 300 and 400,000 barrels. So most of the black market to China will end up in the US. How fast?
300,000 more or 300,000 in total?
In total, 300 to 400 in total, which is less than the 500,000 that we used to export to the US.
Right.
It's a sizable number. It could be either twice of what it is today with Chevron, or even more. But it may take a little bit of time. However, think about this. These refiners were eager to get this oil from Venezuela, because they used to have specialized facilities to process this extra heavy oil or heavy oil from Venezuela. They haven't been finding that oil in the market. And so, as the situation with Chevron proves, they very quickly were able to sell almost all their barrels in the US very quickly. I think it will prove relatively easy if these other obstacles of our compliance are not a problem to find buyers for Venezuelan heavy oil in the Gulf Coast of the U.S.
Because correct me if I'm wrong, another producer of heavy oil is Russia, right? So that's why, is that right?
Yeah, well, not exactly heavy oil. Their oil is a little bit lighter, but you're right that Russia was taking the market that Venezuela had left, the 500,000 barrels that Venezuela left. A lot of that market was taken over by the Russians, typically with bottom of the barrel refining products, not as much heavy oil, but a similar kind of input for the refineries. And when the Russians were sanctioned, then you had sort of a triple whammy. On the one hand, Mexico is not, is reducing their exports of heavy oil. Venezuela was out, Russia was out, and so the refiners are looking for this type of oil.
So you have these refineries that are meant for heavy oil or heavier oil, and they don't have any. Got it. So let's unpack that a little bit. So you said that now Venezuela will probably export around 300 to 400,000 barrels of oil per day. What does that mean to the Venezuelan economy? What does that mean to the government? Obviously, we all know that Venezuela is in the middle of a complex humanitarian emergency. Can you help us unpack in the short term how that increase in oil export will translate for the economy?
We can talk later about production. I don't think production will increase that much more. But let's talk first about the change in flows, the redirection of flows from the black market to the US. I think that will be a significant improvement in the income of the Maduro administration, because basically they are selling at a discount that sometimes is as high as 50%. If you consider all the difficulties that they have had in selling the oil, that a lot of them, by the way, we learned with the scandal of corruption that earlier this year was disclosed. And so basically this means that not only Venezuela will have been able to get full price, which will be about $10 below Brent, but on top of that, Venezuela will be able to get that money fast in cash instead of barter, throughout Turkey and Russia, etc. So this is and by the way, the cost of transport, of course, is lower to go to the Gulf Coast.
Closer.
It's much closer. So all in all, I think, Venezuela might increase, not as much as double, but a little bit less than double when and if they can get all the oil redirected, which, it might take some time. But I estimate that instead of, getting a $500 million, they will be per month, they will be getting closer to $1 billion per month. So it's a very important amount of money that Maduro could use to improve his electoral stances by, spending money in electoral purposes.
So let's talk about the other country of this equation. A lot of this oil, as you're saying, is coming to the Gulf Coast refineries. We cannot be naive and say that there is an election. Of course, there's an election here in the U.S. happening next year as well. We're in an inflationary context. Does this extra 100,000 of barrels of oil per day represent a impact on the price of gasoline or that Americans are going to see, in your view, your opinion?
Yeah, that's very interesting because, the price of oil is determined, even though there are different kinds of oil. And as we mentioned, this heavy oil is very attractive for the refiners in the Gulf Coast. For the most part, the price of oil is determined in the, a global oil market. And what matters for that market is how many barrels Venezuela actually adds to the market, not redirects from one market to the other. It is true that the refiners in the Gulf Coast will benefit from this, no doubt about it, because they have a spare capacity that they are not using because they need to process this kind of oil. So no doubt that's a benefit for the United States, at least for the refiners. In terms of the price of gasoline, I think it's unlikely to be significantly affected. Might be a cent or two, but the main determinant of the price of gasoline is the price of oil internationally. But there might be, for example, benefits in the price of other products like diesel, because the heavy oil produces more diesel than gasoline. So that's, a benefit because diesel, of course, is used in trucking. And so there might be some marginal benefits. But I think that for the most part, because Venezuela will not add that many barrels of production, the effect will not be significant. And I'm talking here of a horizon of either 6 months, which is the term of the license, or say to the elections in the US. It's not going to be that significant.
Got it. As many of you know, Venezuela owns Citgo, and Citgo has many creditors of Venezuela in the past who have been unpaid, or service companies whose services have not been paid for are saying, well, we won part of Citgo because our securities have not been paid by the Venezuelan government or PDVSA. Can you talk a little bit about where Citgo stands today, and if in fact you see that a sale is going to go through, and what would that mean to both the Venezuelan and to the U.S.? Because I understand Citgo is a very important refinery and asset within the U.S.
Yeah, Citgo is a very large refiner. I think it's the seventh in size in the US. It's currently a very profitable company because I think not only it's well run, but also the margins of refining have been very high since the war in Ukraine. But as you pointed out, there are basically two main claimants or creditors that have advanced in their litigation towards getting these to get paid their debts from the Venezuelan government. One is Cristalex, a former mining company that now the claim is owned by a fund and some lawyers. And then the bondholders of the PDB 2020 bond. However, there's still a potential sort of obstacle for the Reuters today reports that there is a set date to execute the shares of Citgo, and that will typically end up in the hands of another big refiner in the US that will be attracted to these very attractive assets. But there is sort of an obstacle, which is the OFAC, because the Office of Foreign Assets of the Treasury of the US, so far among the sanctions, does not allow transactions with these assets. And so the license that does not allow this to happen was recently renewed. And so, and also lawyers tell me that there will be a significant amount of continuous litigation before the actual enforcement of this decision by the court. So we might have to wait for a while into the ultimate decision, but it is clearly in danger for the Venezuelan opposition, who currently controls Citgo, to lose this asset.
Got it. So you don't foresee an immediate sale of Citgo in the near future. Thank you.
No.
Let's go back a little bit politically and mix in, of course, this recent lifting of sanctions. So we were talking about María Corina Machado, and the U.S. has been clear that this recent lifting of sanctions, it's in a temporary basis, right? And it's in 6 months. It's for 6 months only, right? In those 6 months, they want to see some progress. And it seems like the clear elephant in the room of that progress would be to allow this woman who got a huge mandate yesterday in these primaries to be the candidate. However, at the same time, this deal between the U.S. and between the unitary platform and the U.S., therefore lifting sanctions or some of the sanctions, it's beneficial to the U.S. because it allows us to also reduce the impact of the sanctions are having on the migration crisis, which, as we know, has been a big challenge for the Biden administration. It allows them to also send some of the migrants back, like they have done already once, and they're, I believe, sending another plane today. And also, as you say, another supply of heavy crude that can go directly to the Gulf Coast refinery. So how likely do you see the Biden administration recalibrating its sanctions if Maria Corina is not allowed to run or to be a candidate in the upcoming presidential election in Venezuela?
Yeah, that's a very interesting question because, of course, from my perspective, which is the oil perspective, it's also a very important question, right? Because it might be the clawback or the reversal of the sanctions, and that might mean that, for example, companies that might be considering investing or not in Venezuela, are also have a massive uncertainty because not only the U.S. government said this is for 6 months, but they said we want to see progress in this particular front that you mentioned before November, and so what is the progress that they want to see. I think Maduro might be able to start doing something that is not lifting the ban on María Corina Machado, but that might look like they're doing something to that regard. I mean, he, of course, already liberated some prisoners,
Right.
political prisoners. And so that's part of the other part of the requirement that the U.S. had put for the November for continuation. I do not foresee a quick clawback in November. I think Maduro will do something that they will consider some kind of progress.
Right.
The question is, as we get closer to the election date in Venezuela, which is, by the way, possibly close to the U.S. election too, if she is allowed to run or not. And otherwise, the U.S. has put a lot in terms of almost a red line saying we will then claw back some of these sanctions relief. I don't foresee, and I think your interview in your podcast with Juan Gonzalez seems to point to the direction of saying it's going to be more selective. So they are not going to go back to the Trump sanctions policies in any scenario. What exactly might they enact? Well, think about this. They already have, for example, the license to Chevron that predates this recent event, right?
Correct.
I think, and by the way, talking about production, most of the increase in oil production that we will see in the next 6 months will occur because of the license to Chevron, not because of this new license.
Not because of new investment after this lifting, but because of that.
Correct. And I think PDVSA will spend all their money will give all their money to Maduro to spend in elections, and the other potential producers, which are the 3 European companies, Eni, Repsol, and Morel and Prom, or the Chinese, might be cautious unless they get also a specific license, to do something with so much uncertainty. But I do think that eventually you will see at least these companies, the European companies plus Chevron, continue with their licenses. And it might be that PDVSA itself loses the access to the American market, except through these companies. Think about this, already 150,000 barrels goes through Chevron.
Right.
And so it will be less attractive for PDVSA, but it will not be going back to the Trump sanctions regime.
Got it. For listeners, Francisco is referring an Americas Quarterly, which is a publication that the Council of the Americas publishes. It's an interview with Juan Gonzalez, who's the top White House official for Latin America, and we will put that in the show notes. Francisco, let's just say you're an oil executive, you're a legislator in the Capitol Hill, you're a member of the European Parliament. What are you looking for in this next 6 months? Not only for situations inside Venezuela, but also what are you looking for globally to know how to recalibrate or not that sanction framework that we were talking about before?
Sure, that's a very interesting and complex question. But I think if you think about the short term, as I said, this is not a game changer for the oil market. So it will not solve a situation in the Middle East or, involving Iran or the situation with Ukraine. Having said that, in the longer term, for the Western democracies, they might feel that having a new source of potential source of hydrocarbons, outside of these regions that are in conflict, it's very attractive. And as we know, the Europeans care much more about natural gas that we haven't talked about, but there's also a license to Shell and Trinidad to export natural gas eventually to Europe.
Let's just talk a little bit about gas. That's something I know oil is predominantly the largest export of Venezuela, but can you just give our listeners a quick overview of what Venezuela has in terms of gas and how much of does it export and who consumes it?
Yeah, Venezuela doesn't export any gas, which is amazing because the Venezuelan gas fields offshore were being developed at the same time that Trinidad developed them in the 1990s. And in the meantime, they developed their full fields, and they are declining now, and Venezuela hasn't exported the first molecule of gas. But now we know that there is a license for Trinidad and Shell to take the gas from a field that is very close to the border between Venezuela and Trinidad, and then use the existing facilities in Trinidad to export it to Europe. And that is going to be 300 million cubic feet of gas. That is not a game changer, but it's relevant for Europe. And then we have the potential for other projects. Eni and Repsol in the eastern part of Venezuela have a big field. that they use for the domestic market, but there is a potential for building an LNG facility there. That is a much riskier thing because it's from scratch compared to, using the Trinidadian facilities already. And even, there is another field between Trinidad and Venezuela that could be another potential source. So gas is relevant geopolitically because the Europeans care for it. It's not that important in terms of money for Nicolás Maduro. Oil is much more important for Maduro. But since he has realized that the European companies and the European governments care more about gas than oil, he has shifted and he's taking much more interest in gas policy lately.
Got it. So in the next 6 months, we're going to be looking at what happens politically in Venezuela, I guess more than what happens in other areas, because the potential of Venezuelan of adding gas and oil is not as much that it will totally change, right, the supply and therefore have a significant impact on prices. Is that correct to say that?
In the short run, without a doubt. But as I said, the Europeans are thinking strategically, maybe in a longer horizon. So I think we should not overstate the advantages of this deal for the Biden administration for the elections in terms of gasoline. But we should not understate the fact that Venezuela could be a major producer in the future of oil and natural gas that could allow the Western democracies to have another source that is not in the middle of two very conflict regions, which are, of course, Central Asia and Russia and the Middle East. So I do think that they will follow very closely what happens in Venezuela in terms of the politics. I think they do care about Venezuela's democracy, both the Europeans and the Americans. But I think all of them believe that we shouldn't go back to what they consider the failed sanctions policy that didn't produce a political change in Venezuela, and that the relations should be normalized. Hopefully, they think under a more democratic Venezuela. But I don't see appetite in Europe, even in the US a little bit, maybe more, because there is a group within the US that really doesn't want the US to have relations with Maduro. But bottom line, I think in any scenario, we will see less a stringent sanctions regime in the future. But hopefully, the current license and the tools that the US has and the Europeans, if they use them smartly, might allow, just might, but there is a chance still for Venezuela to become more democratic.
That's a great answer. And I hope that that's the case. Is there any other variable? Is there any other player? Is there any other factor that we have failed to address today that you're looking at when it comes to Venezuela and its contribution to the oil market and the gas market or politically internally?
Yeah, well, I think we have to take, of course, into consideration the other countries in Latin America that shifted, from being supporters of the sanctions regime to be very critical, because of changing governments, right? Like in Colombia or in Brazil and of course, in Mexico. I hope those countries do play a constructive role in not just giving a green light to Maduro to do whatever he wants in terms of the elections, but at least put some pressure on him to have some room for competition in the elections. Having said that, I think that without the pressure of the U.S., there is no way that we will see any significant improvements in the competitiveness of the election. I think Maduro will try his best to, play the card of dividing the opposition, abuse of his powers as an incumbent, as he has done in the past, his use of the media, et cetera, et cetera. If he can spend a lot of money and get his approval numbers a little bit higher, maybe he risks a little bit to have more competitive elections. But I think, in the end, if he cannot do that, he will resort, unfortunately, to a Nicaragua-style kind of game, because he has shown so clearly that he's not willing to give up power in the past under even tougher circumstances for him to sustain. Why would he do it right now?
Well, on that happy note, Francisco, thank you so much for your time today. And you can follow Francisco on his Twitter. He's very, very informative. A lot of people do. And Francisco, we hope to see you in our offices soon. Thank you again for your time. And thank you to those who have listened. And please share this podcast with your network.
Thank you very much.
Thank you for listening. I'm your host, Karin Zissis. This episode was produced by John Orbach. Luisa Lemmy is the executive producer. The music in this podcast was performed for America Society. Check the podcast notes for a link to watch the full video and find out about upcoming concerts at musicoftheamericas.org. Opinions expressed in this podcast do not necessarily reflect those of the America Society Council of the Americas or its members. We hope you enjoyed this episode. You can access other episodes of Latin American Focus at www.as-coa.org/podcast and send us feedback at latamfocus@as-coa.org. Share and subscribe at Apple, Spotify, YouTube, or wherever you get your podcasts. Thank you.